Good morning and welcome back to Your Financial Independence, where we're always trying to grow your financial independence. So today we're going to be going over ETFs that I love. So ETFs, just so you do know, they're allowable to trade during the market opens, whereas index funds, they're basically whenever the market closes towards the end. So ETFs are good options whether you're trying to be more diversified or you're not trying to pay attention to all the stock market news. You're trying to be invested in the stock market itself, but you're not really trying to be invested and having to go over all the news, read all the 10Ks, 10Qs, going over conference calls, financial results for the yearlies. So this would be a really good option for somebody that maybe owns a business or is just too busy to be going over, like I am, like individual stocks, stock picking itself. And so for the S&P 500 in general, the past 100 years has averaged an 8% annual return. And if you do want daily stock market news, whether we're going over earnings calls, overviews of individual stocks, or just videos like this that is for your financial independence, make sure you subscribe, hit the bell notification, leave a like, a comment below. Tell me what stock you're looking at if you want me to do an overview, and I'd be happy to do so. So without further ado, let's get into this. So my first ETF that I would be recommending, which I guess quote that because I am not a financial advisor, but the one that I actually do own is Vanguard Growth Etf. This is more like I use it in my portfolios and my other accounts to kind of like stabilize my accounts, even though I do still have individual stocks. But this would be something really good to just throw $100, $200 a month in, and then that way down the road you can still retire early. So Vanguard Growth ETF, this is VUG, that's the ticker symbol on this. So pricing as of the 29th of this month was $279.96 with an expense ratio, which this is what you really want to look for when you're looking at ETFs, because the brokers and stuff that do use this, they charge a very small fee because these are electronic trading funds. So they do every once in a while change the funds in them. So you're going to be at a 0.04%, and that's annualized. So what is Vanguard Growth ETF? The investment seeks to track the performance of a benchmark index that measures the investment return on the CRSP US Large Cap Growth Index. The fund employs an indexing investment approach designed to track the performance of indexes, which broadly diversifies indexes made up of growth stocks of large U.S. companies. So the advisor attempts to replicate the target index by investing all or substantially all of its assets in the stock that makes up individual holdings of each stock, approximately the same proportions as it's weighted in the index. The fund is non-diversified. So the top 10 holdings is what's really going to move the ETF up or down over the long term. And then the rest of the shares are more diversified, stuff like that. But overall, they're all going to help this ETF go up. So the first in line on this ETF is Apple, which has a weighting of 9.75%, Microsoft at 9.4%, Amazon at 7% flat, Facebook at 3.74%, Alphabet or Google is 3.28%. The other Class C shares are 3.04%, Tesla 2.71%, Visa 1.83%, Home Depot at 1.74%, and MasterCard at 1.67%. So these are all well-known companies. People know that they're going to grow in the future, and that's why these are the top 10 holdings, because these are very safe and they're looking towards growth in the future, and it's just about a guarantee that all these companies in the next 5 to 10 years are going to grow up substantially where they are right now. So just a snapshot of what the fund has done. So the previous close was at $276.25. This is a year-to-date return of 9.42%. Over the past year, this is 54%. And once again, an expense ratio of 0.04%. That's what you're going to be paying yearly just to be in this index, but 0.04%, that's not really a lot. And this also provides a dividend of 38 cents quarterly. So the next ETF that I really like is iShares Core US REIT ETF. This is trading at around $56 with an expense ratio of 0.08. So just to give you a snapshot, this fund will invest at least 90% of the assets, the component securities of the underlying index, and may invest up to 10% of the assets, certain futures, options, swap contracts, cash, and cash equivalents. So this is a REIT, this is a real estate investment trust. And some of the holdings in the top 10 are Equinix at 5.96, Public Storage at 3.89, Digital Realty Trust at 3.88, Simmons Property at 3.76, Welltower at 3 even, Avalon Bay Communities at 2.58, Equity Residential Properties at 2.57, Realty Income Corporate at 2.42, and Alexandria Real Estate Equities at 2.27. So another snapshot of what this ETF has done. The year-to-date return is 17%. As we all know, the real estate market right now is really shooting up. So the 1-year return is 34.71%. This also provides a dividend at 34 cents quarterly. And then the next ETF is Swab US Large Cap Value ETF. I feel like this is more the safest play to go if you're just looking to throw money in somewhere. That way the stock market could work for you. You're going to be getting around probably about an 8% return yearly through all the ups and downs, whether we have a crash, a bull market. So the price right now is $68.07. This has an expense ratio of 0.04%, so the expense ratio is very low. So the purpose of this ETF is to pursue its goals and fund generally invested in stocks that are included in the Dow Jones US Large Cap Value Total Stock Market Index. The Dow Jones US Large Cap Value Total Stock Market Index includes companies ranked 1 through 750 by market capitalization that are classified as value based on a number of factors. So they're using a lot of like the price to books, that what we went over in the previous video. They're using a lot of metrics to find out actual values of the company, like value plays. You're getting the stock for cheaper than what it's really worth right now. So some of the companies that are included in the top 10 is Berkshire Hathaway at 2.48, JP Morgan Chase at 2.22, Johnson & Johnson at 2.03, Disney at 1.59, Procter & Gamble at 1.54, Bank of America 1.45, Comcast at 1.18, ExxonMobil is at 1.17, Intel 1.12, and then Verizon Communications at 1.11. And just a snapshot of what this company has done. So year-to-date return is 14.80 with a 1-year return of 39.71%. And then dividends, this provides a quarterly dividend of 29 cents per share owned. And with this, your financial independence investors, I hope this gave a good overview. Whether you're using these ETFs to diversify your portfolio, or maybe you're not into the news and all the earnings calls, 10Qs, 10Ks, and maybe you're just wanting to invest your money in the economy itself. That way you can grow your money. Maybe you're not looking for these huge like 100% gains like a lot of people saw in 2020. You're more slow and steady. You want an 8, maybe 10% annualized return. That way you can still retire early and still have plenty of money for retirement. And with this, your financial independence investors, I hope y'all have a great day.